JJ the CPA, hope you're doing well. Hey, I put together a spreadsheet for the PPP calculation that was based on the last 12 months. That's what's in the law. And Friday, yesterday, the SBA came out and gave some new guidelines. I didn't really see anything in there that said you can do calendar year, but it seems as though the banks are just going with calendar year or the last 12 months. So if you've not done your PPP calculation and you want to do the easier way, you can do it based on 2019. I don't believe that's the spirit of the law or what's intended or how it's supposed to be in any way, shape, or form. The law says last 12 months, but it's like I've been telling clients quite a bit here recently, which is, you know, I guess whatever your bank's wanting you to do, then that's what you do. Whatever they're going to allow, you can decide to go with it or not. Bottom line is, I went with 12 months, the last 12 months with all of my clients, except for a couple of them. And so anyways, I went ahead and put together a spreadsheet. It's on jjthecpahelp.com. You don't have to provide anything to me. You're not providing an email to then go to some secret seminar so you can get this spreadsheet. It's just right there for you. So I do have already, it's on the JJ the CPA Help. I've got the calculation if you're doing last 12 months, and now I've added the calendar year. So it's both there, PDF as well as Excel worksheets. And thought I'd just walk you through it really quick. It is definitely easier than obviously having to do it breakdown by quarter. So when you're looking here, you're just going to go right to that Schedule C. Let's say Schedule C, W3, and you're going to look at line 5. And so I've got here, this is a W3 right here for 2019. And if you go to box 5, so I recommend Medicare wages. Some of the banks have said put box 1. Problem with box 1 is that there are things that are added that are clearly not wages. There's really no argument about it. They're not wages. For starters, with over 2% shareholders in S-Corps, in box 1 goes their health insurance, which clearly is not wages because it indicates that it is not subject to withholdings, actually in Chapter 24. And then Social Security wages, they are limited. Now, of course, they're allowable, so to speak, above the 100,000. But box 5 is no monkey business to it. So if you're looking at Medicare wages, it's much easier to work with. It's what I recommend. It's the most pure number. So if you just take box 5 and put that into the worksheet and then just putting in your health care coverage, it does need to be what the employer paid. And then retirement benefits paid by the employer. There are some that are, I guess, going an aggressive route and they feel like they can include their $50,000 contribution to retirement. Doesn't seem proper. Doesn't seem like it's the spirit of it. It's not meant to be a celebratory. Oh my gosh, are you kidding me? They're gonna give me, you know, take my $50,000 that I put in retirement and divide it by 12 times 2.5. No, that's not what's supposed to be going on here. It's talking about retirement benefits, and even though it's vague, so to speak, and we can take advantage of the vague, I get it. But if you ask me, when we're talking about employees, it's talking about the match. It's not talking about all the cool things that you can do. It's talking about the plain vanilla match. And then you get to do state unemployment tax. We don't get to do any kind of federal employer taxes. And then you need to subtract out if you got an EIDL, a lot of videos on that. The reason you have to subtract it out is that it's for the same purpose. That's that SBA economic injury disaster loan, or the COVID-19 disaster loan, all the same thing. And remember that EIDL you get at the SBA.gov. You don't get that through a bank. The stinger on that is that if you get an advance or money on the EA or the EIDL, even though it may feel like it's the same, so if you qualify for 70 grand on the PPP, but you got 10,000 from the EIDL, Well, you're only going to get 65 grand on your PPP, but hang on. What you've done is guaranteed yourself, though, that of the 65 that you got on the PPP, 10 of it won't be forgivable. So it'd be better to just pick either or. I also did a video kind of talking about the break even. So if your total wages or your not Social Security, your self-employment income, if it is less than or 48,000 or less than, then you might as well just go with the EIDL because you're going to get more money out of it. PPP being based on wages, you're going to need, at least 48,000 to make the PPP yield a dollar amount that's greater than the COVID-19. And then you want to back out the total compensation of the amounts above 100,000 for each employee. And then, you're going to add it all together and come up with your net payroll, divide that by 12, and you got 2.5. I did put the Excel up there. I didn't put any formulas in it on purpose. I don't know the familiarity, obviously, of everyone that may be using it, meaning the familiarity with Excel. So to avoid there being any kind of issue, I just took the formulas out, but it's not a locked Excel. So you can go in, and if you know how Excel works, you can put together some formulas there, lickety split. So here's just an example, and I'm going to go through this example really to talk about what maybe some are thinking is going to happen come forgiveness time related to the withholdings of employees. So anyways, let's just say we've got for annual 2019 148,000 that we're able to pull from. So that would be right here from Medicare wages, box 5, that would be pulled from. And then if we're looking at the group health and the retirement benefits, which if you look up here, it's a 0.03, so 3%, that's pretty standard. Went with kind of a round figure here for unemployment. Assume this individual took out 10 from the EIDL and assume that one of their employees is 2,500 above the 100,000 in allowable payroll. So then you just are going to take all these, okay, and you're going to add them up, okay. You're going to divide it by 12 to come up with your monthly average, right? And then you're going to take that times 2.5, and that should be the amount that is going to be paid to you. Now, noting down here, you'll, especially with the method of using all of 2019 calendar year, but W-2s, all the W-2s, because the bank needs to see who got paid over the 100,000. W-3 is the summary of it. The 941 is what goes into the W-3 and W-2s. It's the quarterly reports, so you'll want to pull those together. Some of the banks are just saying, give me the numbers. Either way, we're doing the calculations, mostly just so that we know, or the client knows, kind of where they're at with that. So I've got here on, let's go ahead and, let's see. So if we were to go to, let's go to JJ, the CPA help. I just forgot where I put it on there. I'm sure it's just on the PPP section. CARES Act. All right, so yeah, I've got, there's a page on JJ the CPA help called PPP. And in there, I've got the application. That is the new one as of Friday. Video series, and then this is the PPP based on 12 calendar months. Okay, and then this would be on the calendar year. Calendar months meaning that if you're in April, you're doing April of last year through March of 2020 to get your 12 months, as in last 12 months. And then this right here is both, these are in PDF, and then these are in Excel. So that way you're able to, let's see, open that. I thought I'd be able to open that real quick. But this way you're able to get the information that you need. But know that, some of the banks are going to want it differently. They may want more information. And at this point, we're in the process. Then I guess just get it to them. They'll work through it and make a decision. So, all right. Hey, so hopefully that is helpful to get the PPP, but based on the calendar year, because the one that I had before was based on the last 12 months. So thanks for tuning in. I'd love it if you'd subscribe to my YouTube channel. And then don't you ever forget, you've never met a CPA quite like me.